The news about Tether today emphasizes the situation. While all across the world, regulators from different countries are trying to figure out exactly what to do with Bitcoin and blockchain technology and even distributed ledger technology, there are many, many distractions that are leading the masses toward centralization instead of decentralization. And in about 20 days, the CME, the Chicago Mercantile Exchange, which is the largest options and futures contracts exchange in the world, will likely start trading Bitcoin futures to very wealthy institutional and accredited investors. So as the idea of Bitcoin derivatives trading will surely excite many, many people, Bitcoin derivatives is also a conflicting and concerning concept to others. It brings us to ask, what does it mean for Bitcoin futures to be traded across the world? How is the Chicago Mercantile Exchange Group connected to the rest of the blockchain industry? And how much was a quarter pounder with cheese in 1972? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So not a day goes by where so much is happening and so much is going on in the news. It's a lot for people to keep track of. It's a lot for people to process. And it's particularly difficult because there's always new people coming into the space. And so there's always new people that are learning what's the difference between Bitcoin and Ethereum? What's the difference between Bitcoin and Ripple? What's the difference between Ripple and Tether? And over and over, we see these questions come up because over and over, we see these reoccurring patterns of either fear and uncertainty and doubt. And at the same time, we see these reoccurring patterns of mismanagement and questions. I suppose that leads into the uncertainty and the fear and the doubt. It's really all connected. And so as people are relating to the industry, as they're getting involved in the industry, as they're learning about these new aspects of Bitcoin and blockchain technology, they're getting some information from their friends and their family. They're getting some information from the news. They're getting information directly from these different blockchain companies themselves. And it's a lot for people to parse through and to figure out what is legitimate and what is not legitimate. And that's why so often, more than not, everyone is just leaning back toward Bitcoin, back to BTC, back to the one blockchain that has really proven to hold its value and to increase its value over time. In the short period that this technology has even existed, it hasn't even been a decade yet. And so where we're moving into now, we have more and more acceptance from businesses, more and more acceptance from mainstream society, more and more people realizing the extreme benefits, the extreme potential of having a censorship-resistant, deflationary, limited, mathematically neutral, globally trusted, borderless system for exchanging trust, for exchanging value, for exchanging messages with Bitcoin, within the Bitcoin blockchain, and many other projects that are existing that are just emphasizing that community, emphasizing that ecosystem, and really building something very, very interesting that allows everybody to have an equal part of that playing field. Except for the people like us who are getting in now, who, are the early adopters who are taking the most risk. But at the same time, by us taking the most risk, we are surely to see the most reward, right? Who would have ever have thought that investing into the Google search engine means that you would be investing into one of the largest companies in the world involved in AI and driverless cars. I don't know how some people could have possibly predicted that. Or investing into, an online book company, thinking that someday this online book company was going to sell you milk and bread, was just a crazy idea. But we have Amazon here. And it's very, very interesting. And now Bitcoin and blockchain technology that people have been, saying very bad things about, have been naysaying about, have, saying that's not going to take off. No one's going to do that. Just like people were saying that about the internet and credit card information and people putting their credit cards inside the internet and people receiving packages. No one thought e-commerce was really going to take off. Yet the people who took that most of that risk in the early days of that technology and believed in that technology received the most reward. And what we see now is that the companies are starting to come around, the regulators are starting to come around, governments are starting to come around, but only to the point of recognizing that the situation that they wanted to go away is not going to go away. They are still not going to completely legalize Bitcoin and blockchain technology. One of the, what they generally say is that Bitcoin has properties that are like money. A lot of these decentralized blockchain technologies have properties that are like money, yet they don't have all of the properties of money. And that main property that governments and regulators are looking for is a central point of control where they can see every single transaction in the blockchain, where they can issue the currency, where they can, take currency back, and do chargebacks like with Visa now. And, fundamentally, you might think there's nothing wrong with the chargeback. It's a natural part of the system. But if that system is a central point of control where a central person or a centralized group of people are able to, reverse funds, then that goes against one of the basic tenets of Bitcoin and blockchain technology, which is that you can't change an action on the blockchain once that action has already been taken. And so that's going to be really, really interesting. And so where that brings us to now is in America, where there has been so much against Bitcoin and blockchain technology from practically every single level of the game. We now have the Chicago Mercantile Exchange Group about to launch these future derivatives because what they're seeking to do is to A, make money, and B, control this market that is known as Bitcoin BTC. Each of the different countries are taking their way at controlling Bitcoin and controlling the flow of money and profiting at the same time. And that's a little bit of what we're going to take a look at through the course of this video today. So with that being said, why don't we pop at the market, see what's going on in the world there, and then take a look at the news, and then let's discuss. So starting over here at coinmarketcap.com, we are living in a world where there are more currencies. There's over 1,315 different cryptocurrencies. The total market capitalization is currently approaching $250 billion. We were talking about this before. It's currently $242.8 billion, almost $250 billion in the 24-hour trading volume, $9.9 billion, practically $10 billion in the Bitcoin BTC dominance is still very, very strong at 56.3%. So what that brings us is that we have a Bitcoin that is sticking above $8,000, currently at $8,181, 81.81. And the market cap is just continuing to increase. So it's interesting when we broke that $100 billion market cap, and now we just continued to go up. We're going to be looking at 150, 200 billion, $250 billion. And when this hits $250 billion, and if this 50% BTC dominance, roughly stays the same, then we're going to see this total market capitalization of $500 billion. I mean, all of these numbers are inevitable, right? It's practically not even guessing. I realize that there's some risk that the entire market could crash and all the internets, of the world can go away. More than likely, that's not going to happen. The blockchain is going to continue to be here. The world is going to continue to be here. Even if there was a catastrophic event and a whole hemisphere of the planet no longer existed, the internet would still exist, Bitcoin would still exist, people and trading and living would still exist, even if that living was, dramatically different. All right, so Dash, I'd be remiss if I didn't mention Dash is just spiking up. The price of a masternode, if you wanted to own one Dash masternode and have one vote in the governance of the Dash system, then that one masternode would cost you over $500,000 at $519,000 for that one masternode. It's getting more and more unreasonable for even a millionaire to be able to have one Dash masternode. So isn't that interesting? Like if you wanted to be a millionaire and have one Dash masternode and one Bitcoin, you're going to be out of luck because there aren't enough millionaires in the world to cover, to cover both of those. It's really interesting to see how everything is increasing so rapidly. So we were at that $8,000 mark. People tried selling it, and after we were at that $8,000 mark and tried selling it, people lost it. The price dropped down, and then we're at that $8,000 mark again, and now we're above it. It's really interesting to see how this market is going up, how this market is going down, how people are trying to time the market, how people are trying to buy and sell their Bitcoins for altcoins or even USD fiat at the right time. And it's not always working out. It's really difficult to make these right trades. You need to be in there 100% of the time to hit the mark that you're seeking to hit. That's why it's probably better just a dollar cost average, do what you can inside the game, and try not to time the market. Time in the market is always going to be stronger than timing the market. So check this out. This is a image that people are seeing at Bloomberg. So everybody on their Bloomberg terminal is seeing this today, and it says Bitcoin Standpoint raises 2018 Bitcoin price target to $14,000. They recognize we might hit the $10,000 mark as soon as the end of December, and the analysis sees that the price of Bitcoin hitting $60,000 in 5 years. So if Bitcoin was $60,000, then the total market capitalization of Bitcoin would have to be $1 trillion. So what this guy is saying is that the total market cap of Bitcoin alone is going to 10x to $1 trillion, and we'll see that $60,000 per Bitcoin in 5 years. Very interesting. Check out this newspaper. It shows a house for sale, historic building price, 40 Bitcoins. And so just really interesting to see this article, part of the USA Today network, November 16th, 2017, and just to see, 40 Bitcoins. At some point, these were $100 a Bitcoin, so someone could be buying this house at, their cost basis of $4,000, right? Or $4,000 or $40. It's really interesting. And someday if that Bitcoin is $1 million, then you can buy, the sky is the limit. It's unlimited potential. I'm interested to see how many of us are able to hold on to our Bitcoins until 2020 or not 2020, but 2030 or 2040. How much is a Bitcoin going to be worth in 40 years or 25 years even, let alone 5 years or 10 years out? Quick bit of news. We have Bitcoin.com wallet. It's now providing Bitcoin Cash as the default receiving address. I think a lot of people are going to lose money on this when they're trying to get Bitcoin, and instead they're receiving Bitcoin Cash. This is going to continue to confuse people between the Bitcoin BTC name and the Bitcoin Cash BCH name. This is really interesting because if Bitcoin Cash had any other name that didn't have the word Bitcoin in it, then would there be this level of confusion? Like, would Bitcoin.com make Litecoin the default address or Dash the default address? Is this in the best interests of the users? Is this bringing people together? Is this serving, the purposes of making Bitcoin Cash more dominant for the owners of Bitcoin.com? This is a lot of risk that new people have to the market. This is a lot of risk that Bitcoin Cash is providing into the industry. And it doesn't matter if you are a Bitcoin Cash supporter or if you're not a Bitcoin Cash supporter, then I think it's important that we have clear definitions and clear communication, and all of this, confusing people and, which isn't helping with the rest of the fear, uncertainty, and doubt, isn't a push in the right direction for the industry overall. It's not a push in the right direction for the image and the reputation of Bitcoin.com or Bitcoin Cash. So over here, we have this in the news. You probably heard a lot about this already, where Tether has lost apparently $30 million due to hackers, and is proposing a temporary hard fork to prevent the people from spending their funds. It's a really bizarre story. It's really interesting because what Tether is that Tether is a cryptocurrency. It's based on the Bitcoin blockchain, but what they are is a cryptocurrency where the company behind it is seeking to have a ratio of $1 for every 1 US Tether, a USD Tether token. It's not a dollar, it's a token that represents a US dollar, has nothing to do with the US dollar, it's a separate company, and this company is supposed to have $1 US in their bank account for every 1 USDT that they generate. And, there's huge questions, huge concerns about the audits of the funds and, are there really enough dollars to support all of these Tether tokens to, back them? Is there any fractional reserve lending going out with the USDT token? How are the USDT tokens truly issued? Is there any manipulation with the USDT token and then currency exchanges, which then, the entire world across, many exchanges are trading against so that people can get, their Bitcoin into USDT Tether. And by converting from one cryptocurrency to Tether, what you're doing is that you're not going back to a fiat currency. You're staying inside the digital cryptographic blockchain world of funny money. And so you're never realizing costs, you're never realizing gains, you're never realizing losses. And so you're able it's like a holding spot for your money without having to go through customs, right? It's like a holding plane in the air without having to go through customs for people's, cryptocurrency wealth as you're trading between these different tokens. But there's huge concerns about what's happening. And mainly the reason that is because the USDT token is centrally controlled. It's, centrally authorized. And there's huge risks then that people have when they're trusting the Tether, when they're putting their money into Tether, because of the risks and concerns that people have because of the trust between the world, people that don't know the owners of this company and this company, and the way they're running things. And so there's just naturally people don't know if what the company says is true or isn't true. Because we don't know if something is true or isn't true, that's why we have Bitcoin and blockchain technology. And because USDT has this central organization behind it, it leaves a huge loophole for bad things to happen. And in this case, we see that there's this $30 million hack. They're talking about hard fork, and which shows a level of control that they have over the token. And this is just a continued black mark, and a black eye for the Tether and for the ecosystem as people try to figure out what the heck is going on. And all across the world, people are trying to figure out what the heck is going on. And all across the world, starting in Europe, we have the ECB council member that's saying central banks are considering crypto regulation. And so with the crypto regulation that they're considering, they're asking themselves if the legislators or the central banks should intervene. And so on one hand, they're thinking it's like buying shares in the house. If people investing in this product can suffer losses. And so should they help the people from risk, quote unquote, or should they just let people suffer the loss? And so this is really interesting because just a month ago, the president of the ECB said that cryptocurrencies are not mature enough to be regulated. And so now they're questioning if they are in fact mature enough to be regulated. And he indicated that his institution does not have the authority to regulate cryptocurrencies. I guess they're second guessing that and wondering, should they do something, because something needs to get done because this genie is out of the bottle, and people are turning to Bitcoin more and more. Bitcoin is becoming more and more expensive in terms of the market capitalization, and they must realize with the supply and the demand and the limitations of how much Bitcoin is available in the world and the access that everybody in the world has to obtain Bitcoin, that the price of Bitcoin has the potential to moon in a significant and devastating way for fiat currency. So outside of Europe, we also have the Russian minister, And so there's continued pushback that the Russian ministers and Russian financial regulators have from what, we're hearing from Putin, who's really, guru for cryptocurrencies. But the Russian ministers they're saying that they're never going to consider Bitcoin legal. They're never going to legalize Bitcoin within the economy, but just because they say they're not going to legalize Bitcoin within the economy doesn't mean that they are not going to allow Bitcoin to be traded for the bit rubles, and then just a tax that unknown bit ruble Bitcoin conversion 13%, and just make a lot of money on something that isn't legal, right? So on one hand, they're saying it's never going to be legal. On the other hand, they're going to make a lot of money having a system that's allowing that not legal thing to flow through their country's exchanges. So they go on to say that Bitcoins are a foreign application of blockchain technology, and Russian law will never consider them as a legal entity under the jurisdiction of the Russian Federation. Again, they're not going to be able to stop it, so they're not going to allow it, but they are going to create systems and mechanisms of exchange, as we've seen from previous news. Some people are saying that an outright ban is inevitable, and if that was to happen, it would be temporary. It'd be like prohibition or whatnot. It would be FUD to drop the price, to control the people. People would still be able to get access. Eventually, it'd be legal again. They would want the money to flow back into the country. They wouldn't want to exclude that money from coming into Russia. So I don't know. These bans are really a double-edged sword, and if they ban it, it's not going to be good for that country, and if they don't ban it, it's still not going to be good for that country. And either decision, legalizing or making outright illegal, can only increase the value of Bitcoin. As there might be a temporary pullback, but then a huge flood as people start to recognize what's happening. So last thing about Russia, just remember that the Kremlin had announced earlier this year that it's aiming to corner the Bitcoin mining market by pumping millions and millions of dollars into the Bitcoin mining and creating Bitcoin mining facilities, through their systems of business to take away Bitcoin mining shares in the future away from China. We know China wants 30 or 40%. We know Russia wants 30%. We know Japan is seeking to own 7% of the Bitcoin mining operations in the near future. I think this is going to be a mad race, a mad rush, and which is likely already happening. We're just not hearing about it because then it'd essentially be a financial blockchain Bitcoin arms race by countries and states and corporations and individuals. It'll be crazy. I think we're going to see that. But they're going to try to control that ascension as much as possible. It's possible that it can just, boom to the moon, and it would be intense. It would be intense for sure. So then in India, we have India's largest bank confirming a blockchain rollout in December. So even Bitcoin India is really going further as well. They're saying by next month we should have 2 beta production solutions ready for use by the 27 banks, and they're also going to invite further participation. And so you have Europe talking about regulating it. You have Russia saying it's never going to be legal, even though they're going to allow it to be exchanged. You have India moving toward the way of blockchain technology and trying not to talk about Bitcoin as much as possible. And then in America, we have the CME, which is the Bitcoin. CME is the Chicago Mercantile Exchange, and they're seeking to start these futures trading as soon as December 11th. So this is barring any delay from regulators. They're going to be starting this trade on December 11th. This is a derivatives exchange. So what this means is that they're going to be taking the value of Bitcoin, and they're going to be placing bets against the value of Bitcoin, and instantly, there's the value of Bitcoin, and then you have someone saying, hey, the future value of Bitcoin is going to be higher or lower. And once they make that agreement, that's a futures contract, that's a derivative. And once they make that agreement, they're sort of making new money exist by placing this bet. And so these derivatives is sort of increasing the value of money, increasing sort of the amount of Bitcoin that there is in using these exchanges. And we know from what they've been saying is that they're specifically going to use these financial vehicles and these, financial tools and these financial instruments through these financial companies to tame and control the value and overall market capitalization of Bitcoin and to control its growth moving forward. So we have here that each contract is going to constitute a 5 BTC. Seems like a lot, so it's a 5 Bitcoin contract. It sounds like $50,000. For the contracts, the CME explained that the minimum price fluctuation, or tick, is going to be pegged at $5 per Bitcoin, representing a total of $25 for each one, or for each tick. It sort of seems a little complex to me. I'm not a financial advisor for finance guy, but it seems as if you need a lot of money to be playing in this game. It seems as if there's a lot of rules and a lot of nuances to get involved in this level of futures contract trading. And at the same time here, then they have a process of how the CME would handle potentially large swings in the price of Bitcoin. This just creates a lot of opportunity for centralized authorities to manipulate the price of Bitcoin, to control it from one end, applying pressure in one end of the Bitcoin price while manipulating news or events on the other end, which can, and if you understand when these things are going to be happening or the order in which these things are going to be happening, then you can manipulate the price and one part of the equation, and then you could just benefit from the ups and downs and the swings of the market in the other end of that equation. And this sort of situation is not going to help the average investor. This sort of situation is not going to help the average person. The volatility is going to be even greater, more than likely. And while that volatility is going to be talked about as a negative thing for people, the volatility is actually a huge positive for the traders and a huge positive for the financial corporations, because the volatility is how they make money, right? Taking someone else's money who's selling high or buying high, and then getting their asset when they're selling low. So it's a continuation of the existing, order, of the existing systems, of the existing processes, just simply trying to be applied toward this new system, right? It's like that whole taking a car and wrapping it around a horse sort of scenario. It's going to be interesting to see how these two things, the CME and the futures and the financial system and Bitcoin and blockchain technology, either stick together or rip apart moving forward. And so real quick, you could check out the Chicago Mercantile Exchange and Wikipedia, again, that they're the largest options and futures contracts open interest of any futures exchange in the world, including any in New York City. And so the Chicago Merc, is just a huge organization, creating huge amounts of capital in and out of the market. Its revenues alone, $3.3 billion. Take a look at them and check out what's going on there. And through what's happening with the Chicago Mercantile Exchange, we saw the Bloomberg dashboards are showing people they're increasing their 2018 price targets to $14,000 per Bitcoin. We know other people have already put their price targets at $27,000 per Bitcoin within the next 6 to 10 months. But with everyone's speculation, with all the things that are happening across the industry, with the exponential rise of the Bitcoin value over time, and then, just to put a gigantic cherry on top of the cake, the Chicago Merc, being as large as it is, as we just discussed, can potentially, with the amount of money that can come in through accredited and institutional investors, can definitely bring Bitcoin's price to and above $10,000 this year. It's an amazing opportunity. A couple of quotes in here, one from CoinDesk CEO, CoinDesk Ledger X CEO, in an interview with CoinDesk. There will be, I expect, a lot more trades down the line. This is the first one, but it at least gives you a first guess from the different institutional traders as to what Bitcoin's dynamics will look like from now until 2018. After 2018, we know that things are possibly going to dramatically change as both the regulation gets out of control and the technology gets out of control as well. A lot of developments happening in every single aspect of this industry. Goes on to say, Coinbase CEO Brian Armstrong revealed over 100 hedge funds have been created in the past year exclusively to trade digital currency. At an even greater number of traditional institutional investors are starting to look at trading digital assets, including family offices, sovereign wealth funds, traditional hedge funds, and more. By some estimates, there is $10 billion of institutional money waiting on the sidelines to invest in digital currency today, wrote Armstrong. And it's probably much, much more than that, because once this picks up a little bit, it's just going to continue to snowball upward as it has for the past 5 years or so, since 2013. All right, so where does this bring us? So this brings us to today, and this brings us to the last quarter of 2017. This brings us to consumerism. This brings us to holiday time. This brings us to looking at what's happening this year, just like we were looking at what was happening a year ago, right? So we want to look at the past and see what happened in the past to help us make determinations about what's going to happen in the future. Once the New Year's comes and goes, that first 2 weeks in the January passes, things really kick up that first quarter as people are seeking to, attack the new year aggressively with all the plans that they've been outlining, in the end of the year previously. There's going to be a lot of people trying to, get your money, to have you spend your money. And I guess it's just my advice, my recommendation is to have an extremely critical eye toward consumerism, have an extremely critical eye toward where you spend your money, and especially, consider the places that you're spending your money versus the places where you're investing for yourself, investing for your future, investing in experience, investing in things that are long lasting and things that will make you more productive, let it be a better person or, to get more, done at work. Inflation of the dollar continues and the dollars are worth less and less. The value of Bitcoin is increasing, and there's deflation with the Bitcoin where things are costing less and less in terms of the value of Bitcoin, right? And so we can see that really clearly when we look over here. So I thought this was kind of fun, is that we have this McDonald's menu in 1972, and this McDonald's menu in 1972 is showing a quarter pounder of cheese at 70 cents, filet o fish 48 cents, a cheeseburger 33 cents, milk 20 cents, coffee 15 cents, Coca-Cola 15 and 20 cents. So you get a triple ripple ice cream cone for 20 cents. And so this was quite a while ago. This is about 50 years ago, let's say. And prices have increased a lot, right? And that just goes to show what this means, is that the dollar used to be worth $1, and now $1 is worth 6 cents, right? The inflation in the past 1 year alone was 2.4%, about 2.4%, which means that $1 bill is already worth, 97 cents, right? It's crazy. But over time, the year after year after year of the inflation hitting the dollar and the prices of goods going up because the value of the dollar is going down, a sandwich or a meal at McDonald's probably costs $10 or $15, right? And so it's probably comparable when you look at it like value of gold or value of like some sort of commodity. But when you look at it with the inflationary aspect of dollars, that they can just print as much as they want, this is really taking us in the wrong direction. And what people aren't familiar with, what people aren't in tune with, is that the prices of things are going to go down in Bitcoin as the value of Bitcoin goes up and up and up. And so if you want to invest in the dollars versus Bitcoin, that's a decision that you get to make. If you want to invest in, some brand new fancy thing that, is like a paperweight or something you don't necessarily need in your life versus Bitcoin, then that's, also your option. That's also your decision. It's also your risk risk to deal with. But it's just really interesting with these times and what's happening with the value of Bitcoin and the fear and the uncertainty of doubt of Bitcoin reaching $27,000 and at the same time it potentially crashing all the way down to what? $4,000, $3,000, $2,000. We just don't know what's going to happen. All right, last part of the news. I thought this was fun too. I thought it was really interesting. Ethereum.com domain name. The .com domain name is for sale. $10 million up for sale. So if you want $10 million, it might be like a $7 million reserve. Then you can be the proud owner of that. It'll be really interesting to see what happens with that. So much money into space. If someone wants to snag that up, not really sure what they would do with it. Kind of like owning Bitcoin.com, right? Huge potential for the owners of that. Makes me think about the Ethereum ENS names, where you can get a anything.eth and get a decentralized domain name for yourself. So anyway, that's it. That's probably a super long show. Thanks for showing up. Thanks for being a part of this information and learning about this information. If this provided any value for you, hit that like button. I really appreciate that. It helps other people find this information, and to find this channel helps, encourage us and energizes us. If you have any questions or comments, leave those in the comment box below. Check us out on Steemit or visit us at mintingcoins.com, where you can sign up for a membership. If you'd like a free membership, if you're one of the first 500 people at the website, then we can upgrade you for free. And have you, have an additional place on the web where you can get a constructive community who's there to help support you and your education and to bring people together. It's really the name of the game, because by all of us sticking together, that's how we're going to win. By all of us coming together, that's how we're going to get the right information. We're going to be able to help our families, help our communities, help ourselves, and live in a future that is the future that we all imagined, the potential of the life that we want to live, right? I'm not talking about the perfect utopia, but I'm talking about a society where people can have access to opportunity, a society where people can have access to money, a society where people can protect what's theirs, a society where people can trust each other, and a society that's free from centralized authorities gaining too much power and really infringing upon the rights of other people. So thanks very much, everybody, and thanks for being part of the show. With that being said, I'm glad that together we are minting coins.